everybody. This is a presentation about Five Below's revenue cycle by Macy Miley, Brooke Parker, Kennedy Kingston, Emma Lewis, and Gabby Scardino. Today we will be discussing the revenue cycle, the general issues of it, its mini cycles, and the threats and controls of each mini cycle. My name is Macy Miley, and I'm going to be talking to you about the revenue cycle. Have you ever purchased anything in store or online from Five Below? If you have, you've participated in their revenue cycle. The revenue cycle is an accounting system that is designed to keep up with all components of processing operations such as shipping, billing, sales order entry, and cash collections that are associated with providing goods and services to customers. This process helps companies decide how to produce the right product at the right time, at the right place, and at the right price. For a company like Five Below, having an enterprise resource planning system is the most efficient way to collect their company's shared transactional data from multiple sources, eliminate data duplication, and provide better accuracy and availability of information. Without an ERP system, Five Below would have to keep track of online and in-store purchases using pen and paper, which is nearly impossible because of the amount of data that they have to keep track of. If an ERP system is in use but isn't secure or running properly, this will cause major issues. Because of this possibility, threats to these systems need to be taken seriously. The first major threat could be inaccurate or invalid data, which could result in shipping merchandise to the wrong location or delays in collecting payments because of sending invoices to the wrong address. Another threat is an unauthorized disclosure of sensitive information, which would mean that someone has hacked into Five Below's system and retrieved data that they should not have access to. It is Five Below's management team's responsibility to pay close attention to these threats, but also to put controls in place so that these threats don't happen at all. One control that they could put in place to prevent inaccurate or invalid data is to regularly produce a report of all changes to master data and then review them to verify that the database is still accurate. To control unauthorized disclosure of sensitive information, Five Below could input authorization controls that will restrict access to data and only allow authorized employees to view or make changes to this data. Ultimately, it is management's duty to input controls and manage threats so that Five Below can have a smoothly ran business. Now, let's look further into the revenue cycle and discuss some of its mini cycles.
Hi, I'm Brooke Parker, and I'm going to talk about the threats and controls of sales order entries and how they each relate to Five Below. An incomplete order is when a potential customer places items in their shopping cart and goes all the way through the payment page, but then doesn't complete the transaction. An inaccurate order can damage reputations and lower customer trust, ultimately making it more difficult to keep existing customers and attract new ones. Five Below relies upon the vendors' and suppliers' representations placed in their purchase orders for merchandise, as well as supplier agreements concerning their right to sell the products that are purchased from them. The first control is an edit control that is a text field on a form. Edit controls are generic input fields that have no associated text. You must associate edit controls with data items. Five Below's Code of Business Conduct and Ethics says that suspected fraudulent activity or any concerns or complaints regarding accounting, internal accounting controls, or auditing matters may be reported orally or in writing to the compliance officer, meaning that they have protocol for how to handle data entry edit controls. The second control is master data. That is the core data that is essential for running operations within a business. It is data about key business entities that provides context for business transactions and operations. Under the right to access and data portability section on Five Below's website, a customer may have the right to confirm whether the company is processing their personal information, to access their personal information, and to obtain a copy of personal information a customer provided. Next is invalid orders. If a customer receives an error message saying that they have an invalid order, this can occur when they are not logged into the account they used or created when placing their order. According to their website, Five Below may be denied the revenues associated with orders resulting from the unauthorized use of a cardholder's card number in an illegal activity, even if the associated financial institution approved the payments of the orders. The main control is a digital signature that is an electronic encrypted stamp of authentication on digital information such as emails or electronic documents. A signature confirms that the information originated from the signer and has not been altered. Handwritten signatures mean that the scripted name or legal mark of an individual handwritten by that individual and executed or adopted with the present intention to authenticate a writing in permanent form. Five Below respects the intellectual property rights of others and expects those who use their online service to do the same. If a customer believes that their work or signature has been copied in a way that constitutes copyright infringement, they are to notify Five Below of their claim of infringement by sending a written information to their copyright agent. Next is uncollectible accounts. An uncollectible accounts receivable are amounts of money that a business believes customers will not repay. Non-payment could result from customers going out of business, being unable to pay, or refusing to pay. Accounts receivable arises when the business provides goods and services on credit to the clients. The first control is a credit limit that is the maximum amount of credit a financial institution extends to a client on a credit card or a line of credit. Product specifications and terms of sale of Five Below states that if they charged your account prior to acceptance or cancellation, they will issue a credit to your account in the amount of the charge. They reserve the right to limit quantities on orders placed by the same account, on orders placed by the same credit card, on particular products and promotions, and on orders that use the same billing or shipping address. The second control is accounts receivable aging. In accounting, the aging of accounts receivable refers to the method of sorting the receivables by the due date to estimate the bad debt expense to the business. It is in Five Below's policy that in appropriate circumstances they are to disable and or terminate the accounts of users who are repeat infringers. Next is stockouts or excess inventory. A stockout occurs when customers' order for a product exceed the amount of inventory kept on hand. Five Below has the ability to employ an opportunistic buying strategy when appropriate that capitalizes on selected excess inventory opportunities to purchase complementary merchandise based on customer trends, product availability, and favorable economic terms. A typical Five Below store features an excess of 4,000 stock-keeping units. Their sales depend on a volume of traffic to their stores and a reduction in traffic to or the closing of tenants and other destination retailers in the shopping centers in which their stores are located, which could significantly reduce their sales and leave them with excess inventory. The first control is barcodes, which are symbols that can be scanned electronically using laser or image-based technology. Once a Five Below store site is live, their 5-node distribution center network will enable them to service their stores in 1 to 2 days. Further driving efficiencies, they added scanning technology at all centers, eliminating approximately 50 million carton scans annually at their stores. The second control is training, which has a direct impact on the organization's productivity and performance. Training gives employees a better understanding of their responsibilities and the knowledge and skills they need to do that job. Five Below recently launched Master of WOW, which is an international training initiative for district managers to ensure that this corporation with multiple retailers has every location operating consistently. The goal is to ensure that Five Below customers have the same experience when they walk into a Five Below in Mississippi, for example, as they would in any other state. The third control is a physical inventory count that is a structured approach to counting a company stock where staff uses a predetermined method to count the goods. Companies schedule a physical inventory count at the end of the reporting period. Five Below monitors inventory levels in order to identify slow-moving or obsolete merchandise, as these factors can indicate a decline in the market value of the inventory at hand. A sales forecast that we will discuss next is an expression of expected sales revenue. The management reviews inventory levels in order to identify obsolete and slow-moving merchandise, as these factors can indicate a decline in the market value. Inventory cost is reduced when the selling price less cost of disposal is below cost. The fourth control is a sales forecast that estimates how much your company plans to sell within a certain time period. On Yahoo Finance, you can find Five Below's crucial financial information, including their growth estimates of their upcoming sales forecast all the way up to the next 5 years. The fifth control is activity reports that are a form of workplace communication that describes in clear and concise terms a project's progress. Five Below promotes and strives to maintain a safe and healthy work environment and conduct their business in ways that protect their employee safety and are sensitive to the environment. They are committed to maintaining a drug-free workplace and prohibit the manufacture, distribution, sale, purchase, transfer, possession, or use of illegal substances in the workplace, while representing outside the workplace or if such activity affects work performance or the work environment of the company. The last threat we'll talk about is the loss of customers. The first control is a CRM system that essentially provides a central place where business can store customer and prospect data, track customer interactions, and share this information with colleagues. It allows businesses to manage relationships with customers, helping the business to grow. Disruptions in Five Below's information technology systems and their inability to maintain and update those systems could adversely affect operations and their customers. The second control is self-service that allows people to provide online support to your customers without requiring any interaction with a representative from your company. The most common types of self-service include FAQs, which is frequently asked questions, knowledge base, and online discussion forums. There is a frequently asked questions section on Five Below's website that guides customers to many categories of questions that they might have and that have been asked before by other customers. Customer, associate, and vendor help, return policy, gift cards, and careers in Five Below are some examples of categories with questions already answered about Five Below. Finally, the last control is a customer satisfaction score, or SCAT, that is a simple customer satisfaction survey methodology that measures a customer's satisfaction with an organization. It's calculated by asking questions about the customer's experience, which is formatted in a survey scale that can range from 1 to 3, 1 to 5, or 1 to 10. Five Below's customer service and store procedure training programs are designed to enable employees to assist customers in a friendly manner and help create a positive sales-driven environment, as well as teach successful operating practices and procedures.
Hello, this is Kennedy Kingston, and I'll be talking about shipping. Shipping is the second activity in the revenue cycle. This step includes not only the physical mailing of the products, but also the packaging and preparation that leads up to it. The first step is to pick and pack the order. This includes finding the item and removing it from the overall inventory system. According to the job description listed online, Five Below uses general warehouse associates to fill and pack orders for shipping. Team members use radio frequency guns to scan barcodes used for picking, receiving, and loading inventory throughout the warehouse. The use of more advanced technology such as this helps control the accuracy of orders being shipped not only directly to customers, but also for bulk orders to in-store locations. Since Five Below generally relies on their physical employees to fill orders, this could possibly lead to more discrepancies such as packing the wrong items, not sending the correct quantity, initially stocking inventory in the wrong place, and sending the package to an incorrect address. In addition to the RF guns currently being used, Five Below could consider using a more advanced artificial intelligence system. For example, instead of having employees use the guns by hand, a system of robotic functions could run on tracks throughout the warehouse and fill orders automatically as they are processed, much like Amazon does. After using AI to fill the orders, an associate could then manually check each order collected to make sure the machines are working properly. This could ultimately save time and eliminate human error. Another threat Five Below faces is potentially putting the wrong shipping address on packaged orders. Five Below uses enterprise resource planning to integrate all essential factors into one streamlined system. This helps make the day-to-day activities such as creating shipping labels more efficient and accurate. According to SAP, enterprise resource planning creates higher productivity, deeper insights, accelerated reporting, lower risk, and improved agility. Finally, the last threat Five Below faces in the shipping revenue cycle is theft not only in warehouses but also in store. For example, if a certain Five Below location is filling an order in store using Instacart and someone has previously stolen that specific item ordered, the order cannot be processed since the inventory count is wrong. This same concept could be applied to theft within the warehouse. Five Below implements multiple anti-theft systems such as alarm systems, security cameras, and anti-theft strips in store. This way, Five Below is able to protect their inventory in the event specific items are ordered online for shipping or an in-store pickup, and successfully complete the shipping mini cycle.
Hey, this is Gabby, and I'm going over billing. Billing is the third basic activity in the revenue cycle. Invoicing needs to be accurate and timely for any shipped merchandise. The document that is created is billing process and is the sales invoice. Sales invoice are used to notify customers of the amount that needs to be paid and where they should send the money. Five Below authorizes your card when you place an order, then officially bills you when your order is shipped. For smaller customers, it's common to still print paper invoices and mail it to them. For larger customers, it is common to receive invoices via EDI, which is an online invoice. Five Below invoices show the quantity of each item sold and the price charged for each item. Invoiceless billing occurs when there is a relationship established with a company and customer, and having an invoiceless billing saves both the seller and the buyer a lot of money and time. Threats and controls for invoicing. The most common threat within the invoicing process is failing to bill the customers, which results in loss of assets, data about sales, inventory, and accounts receivable. A quick way to reduce this threat is to separate the shipping and billing functions. It helps to reduce risk that this could occur. Five Below maintains this threat by having separate and billing shipping functions. Another threat is billing errors, such as price mistakes and billing customers for items that have not been shipped or that are on back order. Overbilling can lead to customer dissatisfaction. Underbilling can result in loss of assets. Incorrect calculations of sales tax can result in fines and penalties. Five Below easily avoids this by having the system retrieve appropriate data from the price master and by restricting the ability employees to make changes to the data. Maintaining accounts receivable. The accounts receivable performs two basic tasks. It uses the information on sales invoice to debit customer accounts and credits those accounts when payments are received. The two basic ways to maintain accounts receivable is open invoice and balance forward methods. These two methods differ in terms of when the customer remits payments and how those payments are applied to update the accounts receivable and the format the monthly statements that is sent to each customer. Five Below uses an open invoice method. Each order is billed at the time of the order. Open invoice method, customers pay according to each invoice. There are typically 2 copies of the invoice that are mailed to the customer. The customer is requested to return one of the copies with the payment. The copy that is returned is called the remnants advance. The customer payments are then applied against a specific invoice. Balance forward method, customers typically pay according to the amount shown on the monthly statement rather than an individual invoice. The monthly statement lists all transactions, including both sales and payment, that have occurred during the month, which informs customers of their balances. The advantage of an open invoice method is that they can offer discounts for prompt payment. The balance forward method uses a process called cycle billing to prepare and mail monthly statements under the cycle billing monthly statement are prepared in subsets for customers at different times. It produces more of a uniform flow of cash collections and reduces the time the computer system is dedicated to printing monthly statements. Credit memo, which authorizes the credit of them for a price reduction. After repeated attempts to collect payments and it has failed, it may be written off. The credit manager issues a credit memo to authorize the write-off. Threats and controls in maintaining customer accounts can lead to the loss of future sales and also indicate possible theft of cash and data. It is easier to catch someone else's mistakes than one's own. It provides a means to identify possible causes of fraud. A threat would be that an employee may issue a credit memo to write off an account balance for a friend or cover up a theft of cash inventory. Five Below controls this threat by only allowing credit managers to issue credit memos.
Cash collections is the final step in the revenue cycle. It is collecting and processing payments from customers. Cash and checks can be stolen easily, so accounts receivable should not have direct physical access to these. Ways to control this threat include mailing two copies of the invoice and requesting one be returned with the payment. Remittance goes to accounts receivable and the money goes to the cashier. A mailroom personnel has remittance lists sent to accounts receivable, photocopy in all remittance, and send copies to accounts receivable while forwarding real copies to cashier for deposit. A remittance list includes names and amounts of all customer payments received in the mail. Managing cash flow is important to overall profitability and speeding up the process of customer payments. Companies seeking ways to speed up the receipt of payments from their customers can send payments directly to the company with remote deposit capture software, which scans customer checks and transmit encrypt digital file to a bank to eliminate time and costs from an in-person deposit. A lockbox arrangement can also help, which is a postal address to which customers send their remittance. Participating banks can pick up checks from post offices and deposit them in the company's account and then send remittance advices to an electronic list of all and photocopies of all checks to the company. This eliminates the delay with processing and can select multiple banks around the country and internationally. Another way is an electronic lockbox, which is an agreement with the bank that electronically sends company information about the customer's account number and amounts as soon as it receives the payment. This enables companies to begin applying the remittance to customer accounts before photocopies of the checks arrive. However, lockbox arrangements only eliminate delays associated with internal processing. With an EFT, it eliminates the delay associated with the time payment in the mail system and the lag before the bank makes funds available to a company. EFT is an electronic funds transfer, transferring of funds using online banking software. Five Below accepts payments using a variety of methods, including cash, credit and debit cards, and also gift cards. Acceptance of these payments options subject to rules, regulations, and contractual obligations and compliance requirements, including payment network rules, operating guidelines, data security standards, and certification requirements, as well as rules governing the EFTs. Eliminating EFT and EDI delays of information can also be a control when the FEDI, or the Financial Electronic Data Interchange, completes both the billing and cash collection processes. Both the seller and customers have the capabilities to provide EDI services. Companies can also speed up the process by accepting both credit cards or other types of cards. For certain payment methods, Five Below uses credit cards and debit cards, which Five Below also has to pay the interchange and other fees, which may increase over time and raise operating costs. They rely on third parties to provide payment processing services, including the process of credit cards, debit cards, and other forms of electronic payment. The primary objective of a control is to safeguard the customer remittance. Segregation of duties is the most effective control procedure to reduce the risk. Employees with physical access to cash should not have responsibility for recording the transactions. Each of the following should be segregated tasks. Number 1, handling cash or checks and posting the remittance to customer accounts. A person performing both could commit a type of embezzlement called lapping. Number 2, handling cash or checks and authorizing credit memos. A person performing both of these could conceal theft of cash by crediting a cash memo for the amount stolen. And number 3, handling cash or checks and reconciling a bank statement. If this is performed by someone who doesn't have access to cash or customer remittance, provides an independent check on the cashier, and prevents manipulation of bank statements to conceal the theft of cash. ERP systems should also require specific approval by manager of high-risk transactions. Five Below has procedures and technology in place to design and safeguard their customers' debit and credit cards.
other personal information, as well as employees' private data and company records, intellectual property, and other confidential information. And they continue to devote significant resources to network security, backup and disaster recovery, and other security measures, including training to protect the systems and their data. Handling money and checks in an organization should be minimized. Like previously said, the best way to eliminate employee access to customer payments is through lockbox, EFT, FEDI, and credit cards. When EFT and FEDI are used to pay, sellers should obtain a UPIC from the bank. This is a number that enables customers to remit payments via an ACH credit without requiring the seller to divulge detailed information about its bank account. Retail stores should use cash registers that automatically produce a written record of all cash received. Customers are also there to be used as a check to make sure their total is correct. All customer remittance should be deposited in whole in the bank each day, so that reduces the risk of theft. The best way to handle the unanticipated cash shortfalls is to use a cash flow budget. This can alert to pending short-term cash shortage, thereby enabling it to plan ahead and secure short-term loans at the best rates. The payment methods at Five Below also subjects them to potential fraud and theft by criminals who are becoming increasingly more sophisticated and seeking to obtain unauthorized access or to exploit weaknesses that may exist in the payment system. Taking some of these solutions and implementing it into Five Below can help them.
Thank you for going through the revenue cycle and its threats and controls with us. We hope you enjoyed our presentation. Bye!